This is a podcast from the Business Times. Welcome to WealthBT, a podcast of BT correspondents. Hosted by Genevieve Cua. In this episode, we journey through the highs and lows of selling your business. This episode is brought to you by Pictet Wealth Management.
A business can be the lifeblood of a family. For many families, it's the main source of wealth and the glue keeping family members together. But there may come a time when a business owner considers selling the company to free up capital, manage risk, or simply to retire. Welcome to WealthBT. I'm your host, Genevieve Cua, Wealth Editor of the Business Times. We'll be looking into the challenges and opportunities involved in selling a business. It may be a liberating experience for founders, but it may also be a very emotional one. What guideposts can help entrepreneurs in their decision to sell? How should they evaluate the various sale options they may have? And what happens after a sale? Our guest today is Cheng Hsin Chih, who is the market head for Southeast Asia for Pictet Wealth Management. Before coming to Singapore, Hsin Chih was the market leader of the Special Clients Group in Hong Kong. Thank you for joining us.
Thank you for having me, Jen. It's a pleasure to be here. Please call me Shin.
Okay, I will. Let's get down to it. For the wealth creator or business owner, the business is very much like his child. He nurtured it from the start, devoted blood and sweat over many years, and now it's at a turning point. He or she is now thinking about selling the business. What makes this decision such a tough one for many owners?
The decision to sell, whether in full or in part, makes a transition from one way of life to another. The transaction frees up capital tied up in a business, transforming it into a liquid asset. So the decision to sell can arise from various circumstances, such as inheritance, a change in family situation, or an irresistible offer. For some, it might just be the right time. But let's be honest, selling a business can, for some owners, be more than just a transaction. It can be an emotional deal. It can prompt conflicting feelings, excitement, anxiety, trepidation, alongside anticipation. It's a process that can be overwhelming and brings into question identities, life goals, the people that matter most, and the meaning of legacy. So acknowledging the complexities and emotion associated with selling a business, the reality is that this is a journey not to be faced alone.
Yes, I understand. I've met a lot of people who have done this sale and it go through a process. So let's walk through the typical stages of a business. And how can entrepreneurs create some guideposts to help them in their path to selling?
It's a great question. So I think the way that I think about it is that the life cycle of a business typically goes through several stages. At the start, this is what we call the light bulb moment, when an idea develops into a business proposition and a business plan takes shape. Then there's a need for funding to turn the idea into reality. And eventually, when the business is very strong, the entrepreneurs may want to sell, which will then open new possibilities. But before selling, it's really important to define the goals. True value from a sale can only be realized when there's clear purpose. Before embarking on a journey of selling their business owners must reflect on what matters to them most. This includes considering the perspective of family members, especially the rising generation. By understanding the post-exit aims, business owners can steer the sale towards the right outcome, ensuring proper allocation of liquid assets and effective contingency planning for future investments.
So Shin, have you worked through a client, who's been through this process? Can be very emotional, can evoke mixed emotions. Have you worked through such a case that you can share with us?
It's been my privilege to work with some family offices which have gone through this particular journey. So I think for me, we've met up with a chairman who's ran his company for the past 40 years, and he's looking to bring the company to the next stage of development, right? The children are willing and able to work together with him, but what he really required was to scale up the company. And at this point in time, he was considering a couple of options. One, a strategic sale, or two, partnering up with a private equity firm, which could bring in the strategic help to scale up the business. Because it's one thing to bring up a company from zero to a $1 billion company, but how do you scale that up from a $1 billion to a $10 billion to a $20 billion company? That requires institutional knowledge, that requires expertise, professional CEOs. And I think it's been a privilege to talk to the families, talk to the chairman, understand a little bit of these dynamics about how to pass it on to the next generation, continue to have the next generation involved in a management role together with the private equity firm on this particular journey.
So how much of an adjustment was it for such an entrepreneur in terms of being atop a large company to then in charge of a family office? It's a completely different task.
I think sometimes we forget that we're all human. And even the most successful chairmen of these big companies, they themselves are human. A lot of us, our identity is tied to our family, to our company, to the people around us. So I think that was the biggest challenge. How do you reconcile not being fully hands-on with this company that you've grown for the past 30, 40 years, pass it on to professional managers to take it on the journey in the future, right? Are you able to kind of like do this transition? And I think that's where the trusted advisors and kind of like your family comes in to be together with your family all together.
We've just been speaking with Shin of Pictet Wealth Management on the journey of selling a business. Exit strategies may include sale to a private equity firm, or a strategic partner, or even a competitor. How can a business owner ascertain what works best for the family, the business, and the stakeholders? More on this in a few moments.
And now, back to WealthBT, brought to you by Pictet Wealth Management.
Welcome back. There's no shortage of advice on this issue. We were just talking about how selling a business is the best if it's a very considered decision. So what difference does good advice make, and how might you define good or the right advice?
That's a great question, Jen. So I think the way that I think about it is that working through questions with trusted advisors can help owners define and refine their objectives. Some business owners will have long-established teams, people that have been with them for a long time, while others may not have access to relevant expertise. So good, practical, emotional support can make a sale smooth and efficient. There's a lot to think about, from tax implications on how future wealth should be structured and managed, to getting the right advice, which can help business owners articulate a comprehensive plan taking into account the various needs and aims and best prepare for the future. Trusted advisors can translate confusing financial jargon, save sleepless nights, and simplify complexity. All this can be especially helpful when the owner is still engaged on the day-to-day activities. So the way that I see it is that seeking professional advice is key to identify the most effective way of achieving these goals and involving family members.
So Shin, let's talk about some strategic options or exit avenues for a sale. What are the most common ones that may be on the table?
So what we've seen is that regardless of the reason, business owners need to be clear about the desired outcome, as there are different forms of exit offer different kinds of results. So every instance is different, but there are a few common scenarios that we see in terms of exit options. The first would be selling to private equity. So this is typically a majority sale to an investment firm that specializes in acquiring businesses. The cash is received upfront, may be a little bit smaller than the maximum potential, but the owners generally retain a majority stake in the business. And from this, in the future, when the company is sold, the owner's retained stake will increase in value. The second would be a sale to a strategic buyer. So a strategic buyer normally would be a larger company or a competitor in the same industry. This kind of sale has the potential to offer maximum cash upfront where there is a potential interest from the buyer. Lastly, it would be an initial public offering. So I think this is where a lot of us are quite familiar with this. So an initial public offering has the potential of achieving full market valuation. However, the success of the transaction is exposed to many factors, not least market swings. The company must also meet stringent regulatory requirements and costs, undergo extensive due diligence, and navigate market conditions.
So it sounds like this process could be pretty extended. The process of coming to a decision. How long does it normally take?
It depends. I think that's the best answer. Because what we find is that sometimes this is a very emotional decision. If you think about it, this is the baby of the entrepreneur. Like a lot of our chairmen that we work with, they've been with this company from start until now, 30 to 40 years. And this is the key decision. Do they pass it on to the next generation? Do they do a strategic sale? Do they bring on a strategic partner? And sometimes they're so attached to this particular company, the process could be very long and drawn out, or because of a health reason or a strategic opportunity in the market where they want to capitalize, it could be very, very fast. So I think in our experience, we've seen sales which take place within a 3 to 6 month period, or those extended negotiations which take about 2 years.
And how important is it to get everyone's buy-in? And I mean by everyone, I mean maybe family members who are involved in the business or key employees. How important is that?
I think for us, we always suggest bringing in the key stakeholders. So I would say 70% of our businesses that we cover are still family owned. Like traditionally family owned, where you have the patriarch with family members all together, they'll control maybe 70, 80% of the company. So those would be the key members that you need to kind of come together to a consensus. Generally, the chairman would have a view, and the second generation, they'll talk about kind of what they would like to achieve, because some of them would have different objectives. Some of them might not want to continue the business, versus some of them would want to pass it on to the next generation. So I would say the key would be to bring together the family, the lieutenants which are critical in the strategic decisions, and then kind of make the decision together.
Actually, this touches back on what you said earlier about working out your objectives. And you talked also about legacy. So in a way, at that stage, there should be agreement already on these objectives and what kind of legacy that the owner may want to create or the family wants. Is that right?
Correct. And so I think the way that we always approach it would be, we'll put together a little bit of a family forum. We'll bring together the key members of the family, because the next generation's aspirations will be a little bit different from the first generation, right? And the key is communication. Every family is different. Every family has different objectives, right? The trusted advisor's role is to facilitate the dialogue.
Okay, so now let's talk about post-sale. What happens after a sale may be as important as pre-sale. So let's assume the sale is successful. What happens next? This phase likely presents its own challenges.
So I think for us, what we've seen post-sale is that the former business owners transition to a new role as investors. They need to adapt to an investor's mindset, consider their involvement in future management of their wealth, and coordinating this would be the key for the trusted advisors. Wealth planning considerations will start to arise, and the various options would be establish a family office, which can provide a comprehensive solution to investment decisions, integrated tax planning, insurance, tailored solutions, but it comes with significant costs and responsibilities. The second could be an outsourced investment committee, which can be formed to steer the strategic direction of the portfolio. And lastly, we could consider private funds, which offer economies of scale and a strong portfolio hedging. What we see is that former owners are always looking to stay active in their business, can also start to invest your cash into new ventures, buy direct stakes in other companies, and time to drive positive change through impact-driven investments or entrepreneurial philanthropy.
In a way, this is a new opportunity to involve family members as well, isn't it? Like
Correct.
Perhaps those who were formerly in the business now have new roles that they could play. Thank you, Hsin, for sparing some time with us.
It's a pleasure, Jen. Thank you very much for having me.
An entrepreneur who has spent decades building a business must surely feel mixed emotions at the prospect of selling it. Yet, when the sale is successful, done and dusted, he stands on the threshold of a fresh phase in life. Having unlocked wealth from the sale, there's so many possibilities, like building a new business, giving back to society, or investing with a multi-generational view. I hope you've gained meaningful insights from this episode. Until the next time, thank you for listening.
This episode of WealthBT was brought to you by Pictet Wealth Management. This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.